Hello traders, Greg here. Today I'm going to cover changing price actions signaling changing beliefs. So when we're swing trading, we're looking for stocks in trending either up or down. On the daily chart I put on the 20, the 50, the green line, and the 200. If prices are above all of them and the 20 is rising and the 50 is rising, that tells me that the daily and weekly trends are pointing up. 20 is above the 50, both are advancing. One of the attributes of a trend where there is a high degree of certainty in that trend is seen by candle ranges that are relatively equal in range. And we see on the left side of the chart, the majority of these bars are relatively equal in range. Back here in December, we saw a wide range bar after multiple bars moving up, which historically signals there's going to be a stall in momentum. It doesn't mean that there's going to be an end in the trend. And there was a potent reversal. I don't know, I'm not getting my protractor out to see if it engulfs the whole body, but you can see it was a big red candle that went down to the bottom of the wide range bar that would suggest it was going to pull back. Now, we say pull back to where? Well, this high, this red dot there, which is denoting that there is a pivot or three lower highs to the left and right, is what we would call minor support, and it could pull back to there, and we'd see if buyers would step up. Well, it doesn't always happen that way. And after three bars going to the right is going sideways, things begin to change and suggest that maybe it's not going to go down. We don't know just yet, but knowing that these ranges are about equal in range, the trend is up, the moving average, as I explained, the benefit of the doubt is that it's going to move up. Now, as it moved up in January, we see that it pulled back to the rising 20 and began to make the turn there. And now you got a few pivots to the left. It doesn't mean it can't go up, but it wind up breaking lower. And at that point, the expectation is it would go down to the 50 MA. You look to the left to see if it lined up with any support, and it was, and buyers begin to advance the stock again. Now, I would imagine this big volume spike in large gap, that was on earnings. And so the trend was up at that time. The benefit of the doubt would be that since the trending up, that the earnings would come in well, and it would go up. Well, of course it did that. Now, the ranges begin to expand a bit more, and at that point we see prices begin to get erratic. As prices pull back, they attempt to break down, they come back up again. Notice another big wide range bar, and it marginally makes a new high and then begins to falter. Now, at the time where it was up at a new high, expectation is that it would continue to go higher, of course, maybe up to $200. But it winds up coming back and closes under the low of the wide range new high bar. That's bearish. Any uptrend, prices could recover, but we have to recognize what's happening as this is what typically doesn't happen. The way it was moving up on the left side of the chart and a red bar ignored is typically what happens in a bullish trend. Now here, going back down below the bottom of a wide range bar is a negative. We're going to see what happens from there. Since it made a new high, this pivot low in March becomes our major support. And if prices close below that, the trend is no longer up. We would mark it as sideways and possibly transitioning lower. So prices came all the way back down. They broke down through the 50 MA. And at that point, I would expect that it would go down to fill the gap. Now, it didn't do that. Why did it stop there? I don't know. There's nothing to the left. It's in the middle of the gap. Nonetheless, buyers stepped up there. Maybe the markets started to advance. But at that point, we'd say the trend is broken by the way it came down. Now, as prices went down a little bit, then they went sideways. And I've got this green dot marked on this gap reversal day. That's a potent gap reversal, bullish gap reversal bar suggesting prices would move up. And they did. Now, at that point, we recognize that prices went down. They retraced all the way back up. They're up at resistance. Sellers are going to be there. Maybe it could recover. So when we see that kind of strength, that power gap reversal bar, and the strong move up, we would begin to anticipate that buyers would continue to step up and eventually work things out to where they would go higher. Well, as we can see, it didn't happen. And what wound up happening is that it formed a pivot there in June. It pulled back, it made a lower high, and it starts breaking down, and it closes under the 50 MA again. At this point, we know for a fact that it's forming a wide trading range. And after prices have been moving up for a while, when they form a wide trading range, they're usually transitioning from up to sideways to down. Now, to move down, they would have to break down below that prior pivot low, and we'll see if that happens. A significant lesson here is that we have an attribute to be able to recognize when there's a strong trend, rising moving averages, 20 above the 50, 50 above the 200, railroad track type of advance, ranges about equal in size, and then as prices begin to pull back, and then the ranges begin to expand and start to move sideways in a relatively wide range, clearly something's changing, especially once prices break below an area of major support, the low prior to a higher high. It's no longer in an uptrend. At that point, we don't know whether it's going to transition all the way into a downtrend, and things tend to become erratic. In the middle of May, we had that gap down reversal bar that would signal a move higher, and prices did move to the top of the range. At that point, we certainly could have put on a put spread, it's a great pattern for that. Now, as prices get to the top and go sideways there, they are suggesting that they could go higher, but that didn't work out. And prices broke back down again. And you see they're back below the 50 MA. So at this point, the question is whether buyers will step up again at the bottom of the range. And if they close below the bottom of the range, at that point the trend turns down and we'd look for lower prices. So we can see the attributes of what's strong, what's transitioning, and if this does transition to a downtrend, prices ranges will get tight again as they trend lower to some significant support level. Any questions, email us, Greg and Dan at Master Trader.